I think right now, the big game is being played in the derivatives market on energy. It was as well the derivatives market which has been moving it up tremendously. And some of that might be pulling back a bit due to credit issues and people deleveraging in general a bit. So it's relatively hard to say where the short term oil will go because demand supply globally is not really moving that much.
And when we talk about this issue of what happens to those countries looking to help offset the impact of Iran oil coming off the market here, do you think we will see the U.S. grant some waivers to those countries who have requested them?
Look, I would take it that we'll have very little waivers. But in general, people who have oil will always find a way to sell oil. There's always a black market, and there are probably sufficient people who will basically place some of that oil through the back door. And so we'll never go down to zero.
Do you think the U.S. is willing to kind of turn a blind eye to that and then just say, look, we're talking tough, perhaps not enforce going behind the back door as you suggest? Because to be honest, the U.S. government doesn't want to see the oil price go too high either.
I think, look, the U.S. is quite happy to have oil somewhere between 60 and 80. It keeps basically the shale operation afloat, and it doesn't really add that much inflation. We have now midterms, so probably would expect oil to be a bit lower. And if you look at inventory levels, they're one day up, one day down, so the market flushes in and out every day. I don't think the U.S. is now really have a big mean to basically play that oil market up and down. I think it will be the larger Russian oil consortium which on the end will fix the price of oil.
Is it the supply issues at the moment, though, that are keeping oil to the downside? When we talk about the big move last month, the U.S. supplies are certainly part of this, aren't they?
Look, there's not many people who buy in Asia U.S. supply.
Sure.
So if you actually look, the Saudi and the Middle East output to a large extent is going to the east. And it will continue to go to the east under the Russian consortium of oil now, the new OPEC, and I think that will continue.
When you talk about the demand from Asia, I mean, we can't ignore the trade factor either. You mentioned that supply demand not shifting altogether too much today, but what happens if this U.S.-China trade factor lingers on? What happens if President Xi and Trump don't come to an agreement, as many are hoping as we speak? Then what do we see in the way of demand?
Look, if you actually look, let's look at China. And if you look at your export market, it makes 20% of the economy. And if you look at basically the sanctions are covering what, $500, $600 billion, 20% of that is $120 billion cost to China. It's not going to really make that much difference. It will reduce growth a little bit by 0.6, 0.7% altogether, which is already more or less absorbed in it. The domestic economy in China becomes much more important. If you look there, China is actually stimulating already back the economy. And so I don't really expect that demand is falling off the cliff.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.